This is the Scrap Metal Commodities Recycling and Economic Report by BENLEE and Raleigh Goldsboro Recycling, January 29, 2018. This is a special remote edition as we attend the quarterly recycling committee and board meetings in Washington, D.C. Last week, commodity prices and economic reports were mixed. On the left, U.S. steel production rose ahead of where it was last year and 2 years ago at this point in the year. A nice start to 2018. Oil rose $10 a barrel to $70.33, near multi-year highs on solid global demand and continued OPEC cuts to get prices up. U.S. oil production rose, remaining near all-time highs, a great job creator which is working to keep oil prices from rising faster. Iron ore fell about $1 metric ton to $74.50, staying near multi-year highs on good global demand and as supply slowly ramps up. On the left, scrap ferrous prices were steady and remained about double what they were 2 years ago. Many were saying February prices could be no change. Last week there were some softening comments, but the U.S. dollar hit a 3-year low, which will increase exports, so the direction is not clear. Stainless 304 scrap was no change, staying at a multi-year high of 39 cents on good demand and supply. Copper rose a penny to $3.20 on good supply and demand, along with a weaker dollar. Copper's up 2 cents this morning to $3.22. The 5-year chart shows copper remains slightly off the recent 4-year high on good demand and supply. Copper inventories rose near an annual high on little or no news. Aluminum rose a penny to $1.02, remaining near the 5-year high as global manufacturing and construction remained strong. Aluminum inventories held near about 8-year lows as production continues to increase to meet demand. The U.S. dollar hit another 3-year low as global growth continues at a pace that is good or better than the U.S. growth. A weaker dollar helps U.S. companies that export, increases commodity prices, and makes imports into the U.S. more costly. China's 2017 growth was 6.9% above forecast and above last year's 6.7% growth. Solid growth is keeping upward pressure on commodity prices. The U.S.'s economic growth slowed a bit in the fourth quarter to 2.6%, ending the year with a 2.3% growth, higher than last year's 1.5% growth, now the 9th year of expansion. 2.6% was driven by a downturn in private inventory investment and raised by increases in local, state, and federal government spending. U.S. manufactured durable goods orders jumped 2.9% in December versus 1.7% in November, led by a 7.4% rise in transportation equipment. Shipments of manufactured durable goods has been up 7 of the last 8 months, led by fabricated metal products. The U.S. Manufacturing Purchasing Manager Index rose to 55.5% in January. This is the strongest expansion in February since this is the strongest expansion in factory activity since March 2015, almost 3 years ago, amid faster rises in production volumes and incoming new work. Export sales are also expanding along with the rise in employment. Ray Dalio is the CEO of Bridgewater, the largest hedge fund investment firm in the world, managing $160 billion. Last week he said, if you are holding cash, you're going to feel pretty stupid. This was as it relates to the stock market. This was based on his analysis that corporate profits are strong, putting upward pressure on commodity prices. Wall Street's Dow Jones average jumped 545 points to a record 26,617 as all remained solid in the U.S. and all major global economies and earnings continue to remain very strong across all areas, and that is based on the tax cuts. All major global economies are growing at the same time, the first time this has happened in a decade, bringing upward pressure on commodity prices in the months to come. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.